Hello Gary, welcome to Mortgage Business Expo 2016. So firstly, Brexit. What impact has it had on your market?
Yeah, it's been an interesting number of days or so since Brexit, particularly in the currency markets rather than the economy as a whole. And I think that there's still some debates going on whether we're still going to be in Brexit or we're going to be outside Brexit. I think that's still on the news this morning. But I think the important thing from my perspective is that the consumer confidence has remained high, the consumer spending is still upbeat, and the demand still remains. So from our point of view, we've seen that Brexit at this moment seems to have made little impact. However, there's a long way to go through that Brexit journey, but I think with the demand that still remains there, we've seen little impact on it yet, and there's still great opportunities to grow.
So no, you're in a few different sectors. You're in auction finance, mortgages, secured loans. Is there any section of the market where it has more of an impact than another section?
We haven't seen an impact in any of the sectors actually. You look at when Brexit happened and where we are today, we've had continual growth all the way through it. I think a bigger impact on the markets at that point was MCD, the Mortgage Credit Directive, earlier in March, and then followed by obviously the taxation changes which affected the buy-to-let market. But certainly from when Brexit came into play, although people kind of took a breath in and just held that breath for a short period, it doesn't seem to have waned that demand. As I said earlier, that demand still remains there and it's getting stronger at the moment.
Getting stronger at the moment?
Yes.
So what, in the past few months?
Yeah, we've seen, if you look at what we've done over the last year, so for example, in the buy-to-let market, we had the changes in April for the taxation. We had a record month in buy-to-lets in June, which kind of put the trend of the market, so it shows we can play against the market. But it's the highest record we've ever had, and it was a 65% increase year on year, from June to June. So that didn't get affected. You look at the growth that we're going through now in other parts of the sectors. We've got regulated bridging. We've got a huge growth in that. We do mortgages. We've got a considerable growth in mortgages as well. Bridging finance is as strong as ever, and demand is growing even further. You look at consumer buy-to-lets. That seems to be outplaying the rest of the market as well. We've seen an increase of over 25% in that kind of market as well. So there's all the different types of sectors that we work in. Because we look at a common sense approach, and it isn't all based on just a credit score process. We look at a common sense approach to the underwriting. It means that there's lots of opportunities for us that have come beyond the Brexit period.
So do you think that gives you more of an advantage as opposed to the very prime sectors, the fact that you're about bespoke? Do you think that gives you an advantage in terms of weathering any Brexit downturn?
Yeah, I think what we found is there's a huge demand for alternative finance nowadays. And that's because we deal in the underserved markets. So these are markets and niches that we've identified that the banks don't wish to support. And because they're not wishing to support those, they tighten that criteria, particularly when confidence may wane a little bit in some of the higher high street banks and traditional lenders. It creates more people to look at alternative finance, and that's the position that we work in, and that's where we specialise in.
So you've recently announced that you've allocated 100 million for right to buy. What's the reasoning behind that? Well,
I'm pleased that we've announced that we're going to put £100 million into the right to buy sector. It's been a sector that we supported for many, many years, and it's certainly part of our strategic growth plans moving forward. Traditionally, council tenants had the right to buy, and that's where we supported them to buy their own home. But now housing associations have that opportunity as well, and there's 23 authorities that are running a pilot scheme on being able to allow housing association tenants to purchase their property as well. So I think there's a demand there for it. When you look at look around the country, we've found a number of hotspots. You've got places like London, Bristol, Newcastle, Sheffield, Manchester, Liverpool, all around the country where there is demand for right to buys at this moment in time. So it's very much one of our niches. We will lend to people who have had maybe a less than perfect credit rating, although we lend to people who have got a perfect credit rating. We will lend to all different types of income sources, such as employed, self-employed, zero-hours contract workers, contractors, people on benefits or maintenance or pensions. And we will look at any property type, so whether that's a standard construction or non-standard construction, including high-rise flats, we're able to support that sector of the market. And we do feel it has been underserved over the years, so we're delighted that we can put 100 million into it. We think the opportunities are there for a lifetime for these tenants to be able to purchase their own home. And certainly for a long-term investment, some of these people will get over £100,000 discount on their property price, when they purchase it. But it's not just about the long-term investment. We've also discovered that sometimes mortgage payments can be cheaper than rental payments. So they benefit immediately. So overall, that £100 million that we've allocated to it, we think will create more opportunities for the brokers and obviously their customers to service them.
So what are the challenges for the market at the moment, Gary?
Well, I think the market is in an interesting position at the moment. I think there's three main challenges, Brexit being one of them. But I think when you actually look at the market itself, demand has remained very, very strong. So when you look at the main challenge when a market is strong is how do you stay ahead of your competitors? And often that is considered to be pricing, but it's not just about pricing, it's about the service, it's about the products you can deliver and design. It's also about how you diversify that product range so that you can fulfill the needs and requirements of all your customers rather than just a certain segment of it.
Where can we advance in terms with there's pricing, there's always different aspects. Where is it that there's room for lenders to push the boat effectively? And
well, I think pricing is a difficult one because there's only one way that can ever go, and that's downwards, of course. So I think that where all lenders and brokers need to be more customer centric and look at the service that they're offering. They need to find those niches that they can specialise in, and they can provide what the customer needs for those underserved markets. So when you look at our model currently and the challenges that may be presented to us, we're very much looking at an education piece. We want to educate the brokers to what opportunities there are there, so that they can provide the best solution for their customers. So for example, you look at the Mortgage Credit Directive that introduced into the market second charge mortgages and brought them to the fore. Savvy brokers are now adopting those, and they're also looking at consumer buy-to-lets, they're looking at limited company buy-to-lets, they're looking at development finance, they're looking at bridging finance and commercial finance, which they haven't done before. So I think one of the main challenges is certainly going to be how people get educated to it. The good thing is that people are in control of their own education nowadays, so if they can go out and do that, they will certainly see the opportunities and be able to provide the best service for their customers.
And so that certainly seems the case with limited company buy-to-let.
Absolutely,
is that fair? Is that a place where we're going to see growth?
I think we will see growth in that. To be fair, I think the buy-to-let market is probably one of the other challenges, to be fair. And that is, when you look at the buy-to-let market and the taxation changes that are coming, regulations changing, and more is coming in that way as well, then it's going to have a challenge over the next few years. However, when you look at the market today, we've increased our lending year on year by 65% in the buy-to-let market. We had a record month in June, year on year again. So, the buy-to-let market is still sound and still buoyant. However, I think that with more regulation and more taxation, that is going to become a challenge, and more people are perhaps going to look at limited company buy-to-lets.
Do you think that might temper the market to an extent from sort of lending levels?
I think it's going to evolve, to be absolutely truthful. We're one of the few lenders who provide limited company buy-to-lets, and we've seen a 25% increase already. So I think that the market will shift more towards limited company buy-to-lets. But I think the important thing with the challenge around buy-to-lets is everybody needs to evolve with it and work with the taxation rules and work with the regulations that comes through. And in doing that, when you've got the chief economist of the Bank of England stating that property is still a safe bet compared to pensions, it does show that there is an insight into where you want to put your money at any one point, and buy-to-lets are certainly part of that. So I think it will still be a very popular option, providing that the investor gets the right advice from the brokers and also engage with their accountants as well, as whether a limited company is the right way for them to go with their buy-to-let purchases. So that's going to be a challenge for them over the next few years, but one that I think will be positive as well.
Right, so Together announced a new bond recently. Can you tell me about that?
Yeah, I'm delighted to announce that we closed a new £375 million bond issuance, which has obviously increased our funding capacity and is part of our growth strategy. The bond will sit alongside our asset-backed securitisation and other finance facilities that we have in place, and it gives us a real strong platform to build sustainable growth. The thing is that we've got huge ambitions for growth, and we've got a great appetite to lend. So I think the £375 million bond issuance does reaffirm that we are a serious contender in the specialist finance sector, and with demand growing so dramatically for alternative finance, we're well positioned to be able to serve the market, the brokers and the consumers who need it.